Welcome, everyone. Today, on February 24th, 2026, the global markets handed us a really fascinating puzzle. We saw a day that kicked off with a whole lot of fear, but ended with a massive rally in some places and just stagnation in others. So we're here to break down exactly what went on, and more importantly, why.
Okay, let's just dive right into the heart of it. The huge news today was a complete shocker. A brand new 10% global tariff on all imports into the U.S., with talk of it going even higher. Now, by any normal logic, that kind of news should have sent the markets into a nosedive. But in the United States, something totally different, totally unexpected happened.
The entire day was this incredible tug-of-war. I mean, think about it. On one side, you had this huge negative force, a global trade shock that could gum up supply chains and send prices soaring. But pulling just as hard on the other side was this massive positive force, a landmark $100 billion deal that basically screamed the AI revolution is hitting hyperspeed.
So, let's really dig into this first section and try to decode this defiance. How on earth did the U.S. markets not only ignore the really bad trade news, but actually stage a powerful rally?
Here's the most important takeaway, right here. Today wasn't really a battle of spreadsheets or economic data. Nope, it was a battle of stories, a battle of narratives. You had a political threat on one side and a technological promise on the other, and the market had to pick which story it believed in more.
And to really get why it made that choice, you got to know about this powerful concept, Homo narrans, which basically means the storytelling human. It's this theory that we, as people and as investors, are just wired to be way more moved by a compelling story about the future than we are by the cold, hard math of, say, a tariff.
And this just nails what happened. The magnificent story of a future powered by AI, a future with what feels like unlimited potential. Well, it was just a bigger, better, and frankly a more exciting story than the fear of a 10% tax. The narrative of innovation just completely steamrolled the narrative of political friction.
Now look, this isn't just some abstract idea, right? The hard data actually backs this up. We can use these advanced quantitative models, these tools that measure market volatility, and what they show is pretty amazing. Yeah, the tariff news caused a big initial shock, a spike in volatility. But the market absorbed it with incredible speed and snapped right back to a stable, upward trend. This rally wasn't just hype, it had real conviction behind it.
So when you pull it all together, the picture gets crystal clear. You've got seasoned investors looking at history and saying, we've seen these tariff scares before, they usually blow over. Then you have the absolutely irresistible story of AI capturing everyone's imagination. And underpinning all of it, the general mood was already pretty optimistic. It was really this perfect storm of factors that turned what should have been a down day into a really strong rally.
Okay, now let's jump across the pond to Europe. Because wow, what a different picture. While the U.S. was roaring ahead, Europe was telling a completely different story, a tale of total stagnation. It was almost like the perfect control group for what happens when you don't have a powerful story to latch onto.
And the difference is just stark. You can see it in a single glance. A healthy, positive move for the S&P 500 in the U.S., and then you look at Europe's big indexes, the U.S.Stock 50, Germany's DAX, and they were just flat, barely moved. They completely missed out on all that AI-fueled excitement.
So, why the huge split? Well, a big part of the answer lies in something called institutional economics. The basic idea is that economies with inclusive institutions, the ones that encourage and protect innovation, they tend to thrive. But Europe's more rigid, protective institutions often view disruptive technology like AI not as this great opportunity, but as a direct threat to the way things are.
So what happened? When the tariff news hit, Europe just had no positive story to fight back with. There was a total narrative vacuum. And in that vacuum, fear took over. Fear that AI would disrupt major industries like banking, and of course, fear that its export-heavy economy was just a sitting duck in a trade war. The negative story won, hands down.
And you can see this playing out country by country. In Germany, the immediate thought was, what about our cars and machinery exports? In the UK, it was a broader fear about jobs and the system's inability to adapt to AI. So what was the end result? Well, capital did what capital always does. It chased the big, exciting story. And that story was happening in America, leaving European markets basically stuck in the mud.
All right, so we've got a handle on why today happened. Now for the really big question. What's coming next? Let's take a look at what our quantitative forecast is telling us for the month of March.
The biggest, clearest signal our models are flashing is right here. The AI story,
It is just getting warmed up. We are forecasting a nearly 7% surge for the Philadelphia Semiconductor Index by the end of next month as this race to build out AI infrastructure really kicks into high gear. And that strength is expected to pull the whole U.S. market up with it. Our models are predicting pretty solid gains across the board. No surprise, the tech-heavy NASDAQ and that SOX Semiconductor Index are expected to lead the way as global money just keeps pouring into that AI narrative.
But for Europe, well, the story is pretty much the exact opposite. The models are forecasting a slight but persistent drift downward. I mean, without a strong growth story of their own, and with that cloud of trade uncertainty still hanging around, the outlook just stays pretty negative for the month ahead.
But now look at this. This is where it gets really interesting. The Korean market is looking like it's going to be a huge winner here. I mean, think about it. It's a global powerhouse in making semiconductors, especially the high-end memory chips that are absolutely essential for AI. So it is perfectly positioned to ride this wave. We're expecting really strong gains there as Korea becomes a critical piece of that global AI supply chain.
And finally, our forecast for China and Hong Kong shows this really sharp split. Mainland China's market might eke out some modest gains, probably because of state support keeping things stable. But Hong Kong is a whole different ballgame. As a global financial hub, it's way more exposed to those trade tensions and international money flows. Our models are forecasting some pretty significant drops there, especially in its tech sector.
Okay, so that's a lot of analysis, a lot of forecasting. The big question is, what do you actually do with all this information? Let's walk through a data-driven strategy designed to navigate these very different market paths for the month ahead.
The whole strategy is really built on this core allocation. The lion's share, 65% of your capital, is positioned to ride that powerful AI megatrend. Then, you balance that by using 25% for short positions against the weaker markets. And, this is key, you keep a vital 10% dedicated to hedging, just to protect against any sudden shocks. So, it boils down to 3 simple, really clear actions. Step 1, you target the megatrend. You go long on the markets that are at the very center of the AI story, that's the US and Korea. Step 2, you target the weakness. You take short positions against the European and Hong Kong markets that are facing those structural challenges. And step 3, and you never forget this one, you always manage your risk with the protective hedge.
And this pulls the entire strategy together beautifully, doesn't it? You're basically buying a ticket on the AI rocket ship where all the global money is flooding in. At the same time, you're betting against the areas where that money is fleeing. And then you're carrying an insurance policy, your umbrella, just in case a surprise storm hits. It's all about aligning with the most powerful story out there while making sure you're protected from the fallout.
And all of this leaves us with one final and I think crucial question. Today, the story of tech innovation was clearly more powerful than the story of political uncertainty. But as we look ahead, you have to ask yourself, will that always be the case? And that's the thought we'll leave you with today. Thanks for tuning in.